Okay, so this YouTube, I didn't know this. This is looking really good. Okay. 30-year fixed rate mortgage averaged 5.3% in the week ending July 7th, down from 5.7 the week before, according to Freddie Mac. That is still significantly higher than this time last year when it was 2.9%. Rates rose sharply at the start of the year, hitting a high of 5.81% mid June, but since then, economic concerns have pushed them lower. The 40 basis point fall off offset some of the significant rate increases of May and June. So, over the last 2 weeks, the 30-year fixed rate mortgage dropped by 0.5% as concerns about a potential recession continue to rise. What will my monthly mortgage payment be? But affording a home still remains a challenge, right? So mortgage rates are at their highest levels since 2000s, okay? And listing prices have gone up by more than 8.5% year on year for 24 consecutive months. If there's any silver lining for homeowners, it's that more homes are hitting the market. Okay, in June, active listings increased by the largest annual growth in history of Realtors.com data. Whoa. With more homes on the market, sellers are being forced to compete on prices. Though the cost of financing a home remains high relative to recent years, home buyers will have more chances to find homes in their price range as the undersupplied and overheated housing market still starts to cool. High rates are also tamping down demand among prospective buyers. So demand is low, more prices houses are hitting the market. Mortgage applications dropped by 5.4 in a week ending July 1st from week before, according to Mortgage Bankers Association. Rates are still significantly higher than they were a year ago, which is why applications for home purchases and refinances remain depressed, says Joel Can, MBA's associate vice president of economic and industry forecasting. Purchase activity is hamstrung by ongoing affordability challenges and low inventory, and homeowners still have reduced incentive to apply for refinance. Now let's go on to the next one. So, how much house can I afford? How much home can I afford? Buyers are finding it harder buy to buy homes as inflation takes a larger chunk of their income, and the cost of borrowing has reduced their purchasing power. And a year ago, a buyer who put down 20% on a median price $390,000 home and financed a home with a 30-year fixed rate mortgage at an average of 20% had a monthly mortgage of K 1299 according to calculations by Freddie Mac. But that's nationally, but in California it's way higher than that. Today, a homeowner buying the same price home with an average rate of 5.3 would pay 1700. That's like 500 more. Okay, that's 434 more each month. And from California might be $2,000, $3,000 more. The decline in mortgage rates this week follows a recent volatility in the 10-year Treasury, which dropped below 2.8 million at 2.9 million. Shoot. Freddie. Okay, while the Federal Reserve does not set the interest rates borrowers pay on mortgages directly, its actions influence them. Okay, mortgage rates tend to track the 10-year Treasury bonds. As investors see or anticipate rate hikes, they often sell government bonds, which sends yields higher and with it, mortgage rates. In addition, continued fears that we are heading into a bear market have driven investors into safer, longer term bonds, said Brenner. This inversion might sound ominous, ominous especially in the midst of sustained inflation that both markets and the Fed agree will likely require more Fed funds rate hikes to tape, but it remains to be seen whether these market conditions will lead to increases in unemployment rate or decreases in productivity and production that characterize a recession. In the midst of all this uncertainty, there's hope. We offer down payment assistance that helps the borrower with little or no money down to buy a home now. But our DPA down payment assistance program is not just it's not confined just to the people with little or no money down. It's also for people who do not want to spend their hard-earned cash on the down payment. So I'm here to answer any questions you may have on the economy, housing, and down payment assistance. Just visit our website, go to themoneymarketinc.com, or call my number at 415 510 0127. Until next time, this is Paula Joyce.